nightly business report.
Good evening. Tonight, over the next 4 years, European-backed infrastructure fund boasts to invest $300 million in SMEs in Bangladesh, Cambodia, Laos and Sri Lanka with the goal of accelerating economic growth in these developing nations. After suffering from a shortage of foreign exchange and import restrictions since 2022, Sri Lanka's industrial sector is rebounding as seen by the index of industrial production, which increased by 6.1% to 95.2 points in January. The mixed trend from last week was reflected in the lower closing price of the Colombo Stock Exchange today. Notable drops were observed in the S&P SL20 and all share price indexes, indicating cautious investor sentiment. And following Beijing's announcement of specific spending-boosting measures, Asian equities increased today. There were minor increases in the Shanghai Composite and Shanghai Shenzhen CSI 300 indexes. Good evening and thank you for joining us. The European Fund Infrastructure Fund planned to invest $300 million in SMEs across Sri Lanka, Cambodia, Laos and Bangladesh over the next 4 years, aiming to boost economic growth in these emerging markets. European-backed infrastructure funds, including the Emerging Africa and Asia Infrastructure Plan, to invest $1 billion across Asia and Africa over the next 4 years. EAIF aims to support small and medium-sized enterprises in emerging markets like Sri Lanka, Cambodia, Laos and Bangladesh. Esther Chan, Investment Director at 91 PLC, emphasized the importance of developmental impact and focusing on areas where other leaders are hesitant to invest. EAIF is a part of a private infrastructure development group funded by the World Bank and several donor nations, including in the UK, Germany and Switzerland. The fund recently made its investments in Asia, backing a sustainable aviation fuel facility in Pakistan and a rooftop solar developments in Vietnam. The fund has invested $1.7 billion since 2002, co-investing in over 100 projects across 22 countries. EAIF plans to focus on renewable energy, electric mobility and battery storage in Asia, leveraging private investments to drive infrastructure development. Sri Lanka's solar power industry is facing challenges due to the Sri Lankan Sustainable Energy Authority's ADHOC registration system, raising concerns about its impact on customers. Industry leaders claim that hundreds of registered solar companies are now defunct, leaving clients without necessary after-sales support. Skura Power Solutions CEO Haren Pereira highlighted that many companies enter the market, complete installations and exit, leaving customers stranded. The lack of reliable service providers from long-term solar systems is eroding trust in the sector and causing financial strain for clients. Pereira also pointed out that the only few companies have installed significant amounts of solar power, raising doubts about the market stability. Well, additionally, the absence of testing facilities in the country has led to unverified claims of Class A solar panels, further damaging the industry's credibility. Sri Lanka's industrial sector is recovering, with the index of industrial production rising 6.1% to 95.2 points in January this year, following challenges from a foreign currency shortage and import restrictions since 2022. Sri Lanka's industrial sector is showing signs of reviving following a period of economic turmoil caused by high borrowing and tax rates. The improvement comes as the foreign currency availability increases, import controls are lifted, and business and consumer spending rise due to lower borrowing cost and reduced inflation. In January this year, industrial production grew significantly, driven by non-metallic mineral products, coke and refined petroleum and chemicals, which saw growths of 32.3%, 22.5% and 12.7% respectively. Food manufacturing and apparel production also experienced modest growth, with increase of 1.4% and 1.6%. However, beverage production declined by 9.5%. Despite the growth, Sri Lanka's industrial sector remains vulnerable, relying heavily on a few large-scale industries, particularly apparel. To strengthen its economy, Sri Lanka must diversify and expand its manufacturing base and integrate more deeply into global supply chains. Tea production in Sri Lanka fell 22% in February this year compared to the previous year, totaling 15.59 million kilograms, down from 19.99 million kilograms in February last year. Well, this represents a 3.16 million kilogram decrease in output year on year. For the first 2 months of this year, cumulative production reached 37.16 million kilograms, reflecting a 3.6% drop from 38.53 million kilograms in the same period last year. High-grown teas saw a year-on-year increase, while medium and low-growns experienced declines. Overall, the first 2 months of this year showed a marginal decrease of 0.07 million kilograms compared to the same period in 2023. Negative variances were recorded across all elevations except for high growths. Sri Lanka earned $367.6 million from trade in February this year, bringing the total foreign income for the first 2 months of the year to $768.2 million, ranking trade as the country's third largest income generator after remittances and garments. Sri Lanka's tourism sector has shown strong growth in early 2025, earning $768.2 million in the first 2 months of this year, an 11.7% increase from the same period last year. February's earnings of $367.6 million marked a slight decline from January's $400.7 million, but still exceeded the $345.7 million earned in February last year. The increase in earnings comes as tourist arrivals reached 240,217 in February, up from 218,350 from last year. As of mid-March, Sri Lanka has welcomed 590,300 visitors with a target of 3 million tourists and $5 billion in revenue for 2025. If achieved, this would surpass the country's record set in 2018 when 2.5 million visitors generated $4.4 billion. The country is gaining international recognition, with Sri Lanka being named the most family-friendly destination for 2025 by Condé Nast Travelers, and Poki Trail being listed by the Time magazine among the world's 100 greatest places to visit. The Tourism Ministry plans to launch a destination marketing campaign later this month to further boost the industry recovering post-pandemic. Well, let's take a short commercial break. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The Colombo Stock Exchange closed lower today, reflecting the mixed momentum from last week. Well, both the all-share price index and the S&P SL 20 indices saw notable declines, signaling cautious investor sentiment. Well, now for further insights, we speak with Malinta Thirimanne joining us from LOLC Securities.
Thank you, Vinod. The all-share price index dropped by 211.1 points today, finishing at 15,649.3 by today's close. The S&P SL 20 index also fell today by 71.8 points, finishing at 4,662.7 points. Market turnover for the day was also somewhat subdued at approximately 1.3 billion rupees, reflecting a carrying over of last week's trend of lower turnovers. The overall trend for the day was bearish, reflecting a selling sentiment among investors. Both indexes sustained sharp drops in the morning session and slowed down by midday, though they continued to remain on a downward trajectory till the market closed for the day. 171 of the 285 listed entities contributed negatively to the ASPI today, headlined by Melsa Corp plc, National Development Bank plc, and Sampath Bank plc. The top gainers for the day included SMB Finance plc, Tess Agro plc non-voting, and Candy Hotels Company, while the top losers for the day comprised of Lanchem Developments plc, Ramboda Falls plc, and Palm Garden Hotels plc. Thank you.
The market kicked off week on a negative note, struggling to maintain last week's mixed momentum in the SPI and the S&P SL 20 indices. Well, with uncertain economic conditions ahead, the outlook for the rest of the week remains a bit unclear. Investors are expected to closely monitor external factors, earning reports, and upcoming economic updates for direction. Well, to get a brief idea on this, we speak with Runi Kaushalya from LOSC Securities.
Thank you, Vinod. The all-share price index and S&P SL 20 index both declined by around 1.5% each last week, capping off a volatile week for the market. We can expect this volatility to carry out over into this week as well, with uncertainties stemming from the rising global trade tensions as a result of the various import tariffs imposed by the United States. This has led to many investors adopting a cautious wait-and-see approach, as seen by a 37.5% drop in average market turnover last week, thereby subduing the usual levels of buying interest you would expect to see at the current price levels. despite an announcement from the Minister of Foreign Affairs, Honorable Vijitha Herat, that the government will seek a waiver on these tariffs next month. The impact of these tariffs on Sri Lanka in particular remains cloudy. Additionally, there remain a number of stocks with upcoming XD dates within the next 2 weeks, and as such, price adjustments for these counters are also likely to continue in accordance with their announced dividend payouts. However, there is some optimism surround the release of the official GDP statistics from the DZS during this week, with GDP growth for the fourth quarter of 2024 expected to be around 5%. This could appeal some investors with a more long-term outlook, especially among foreign parties, as Sri Lanka remains undervalued in comparison to other regional stock markets. On a similar note, the latest industrial index of industrial performance figures for January 2025 are also positive, reflecting a 6% year-over-year growth. In addition, upcoming monetary policy reviews from both Sri Lanka and other countries towards the end of March should serve alleviate some of the global economic uncertainties. But until then, we can expect last week's general characteristics of low turnover and high volatility to continue into this week as well. Thank you.
Gold prices dipped slightly in Asian trade today following a surge to record highs as safe haven demand remains strong amid ongoing concerns over trade tariffs and a slowing global economy. Spot gold fell to $2,982.80 an ounce, while April gold futures dropped by 0.3% to $2,991.62. The precious metal had reached an all-time high of $3,005.08 on Friday. Geopolitical tensions in the Middle East, particularly after US airstrikes on Houthi rebels in Yemen, further fueled demand for gold as safe haven. However, this upward trend was partially tempered by progress in Russia-Ukraine ceasefire talks, with President Trump scheduled to speak with President Putin. Additionally, some profit-taking occurred after gold briefly surpassed $3,000 mark last week. Oil prices surged in Asian trade today, driven by concerns over potential trade disruptions following the US commitment to continue strikes against Yemen's Houthi until their attacks halt. Brent crude futures for May delivery rose by 1.6% to $71.73 per barrel, while West Texas Intermediate crude jumped to 1.8% to $68.09 per barrel. Market sentiment was further bolstered by China's announcement of a special action plan designed to boost domestic consumption. Both oil contracts ended largely unchanged last week amid rising trade tensions. The increase in oil prices reflects growing geopolitical risk and expectations of stronger demand. The Sri Lankan rupee has experienced a slight depreciation against the US dollar today compared to last Friday. According to the Central Bank of Sri Lanka, both the buying rate and the selling rates of the US dollar have increased. Additionally, the rupee has weakened against a range of foreign currencies, including the Gulf currencies. Let's now take a closer look at how the rupee is performing against other major global currencies. Short break now. Updates from the corporate world coming right after this. This is the Nightly Business Report. Welcome back to the Nightly Business Report. The first shipment of BYD vehicles arrived at the Hambantota port yesterday, transported from Shanghai, China, marking a significant step for the electric vehicle market in the country.
The first shipment of BYD vehicles arrived at Hambantota port yesterday, transported from Shanghai, China. The shipment, brought it by John Kill CG Auto, the authorized distributor for BYD in Sri Lanka, includes models like the BYD Sea Lion 6, BYD Auto 6 and BYD Dolphin. BYD, the global leader in new energy manufacturing, operates in over 70 countries worldwide. The company is known for its innovations such as the Blade battery and Super DM technology, which have set new industry standards. These advancements in electric vehicle technology have helped BYD secure its position as the world's top new energy manufacturer. The arrival of these vehicles marks a significant milestone for Sri Lanka's growing electric vehicle market. The introduction of BYD's electric vehicles aims to support the country's push for sustainable transportation solutions.
No Limit, Sri Lanka's premier retail fashion brand, has opened its 25th store in Kalagedihena, marking a major milestone in its growth. The new 36,000 square foot store offers an extensive range of fashion-forward apparel for men, women and children. Located strategically between Yakkala and Tihariya, the store blends convenience, style and exceptional service, ensuring a seamless shopping experience. Since its establishment in 1992, No Limit has grown to become Sri Lanka's largest retail fashion chain, expanding beyond the island to the UAE. The opening of the Kalagedihena store highlights No Limit's commitment to expansion and innovation in the fashion retail sector. This milestone reaffirms the brand's position as the leading fashion destination in Sri Lanka. The Sri Lankan Institute of Marketing, in partnership with Kanta, will host the Slim Kanta People's Awards 2025 tomorrow at Monarch Imperial, celebrating Sri Lanka's most preferred brands and companies.
The Sri Lankan Institute of Marketing, in collaboration with Kanta, will host the Slim Kanta People's Awards 2025 tomorrow at Monarch Imperial. Since its inception in 2007, the event has honoured Sri Lanka's most preferred brands, personalities and organisations as chosen by the public. Unlike traditional awards, these accolades are determined through a nationwide survey conducted by Kanta, ensuring transparency and data-backed insights. The awards recognise entities that have built trust, loyalty and strong emotional connections with Sri Lankan consumers. Categories include business, entertainment, sports and media, making it one of the country's most inclusive and sought-after accolades. Slim President Mr. Gayan Pereira emphasized that the awards highlight the importance of consumer-centric strategies. The ceremony will be attended by industry leaders, celebrities and marketing professionals to celebrate consumer-driven achievements.
eChanneling PLC showcased innovative AI-powered health technologies at Medicare 2025, which is Sri Lanka's largest healthcare exhibition. The company unveiled an advanced artificial intelligence-powered face scanning system that analyzes vital health metrics in seconds. Dr. Motilal De Silva, who is the chairman of SLT Mobitel, officially launched the technology, highlighting its potential to revolutionize health monitoring. The exhibition also marked the debut of eChanneling's e-hospital virtual consultation platform and smart ring health monitoring device, providing remote healthcare solutions. Minister of Health Honorable Nalinda Jayatissa experienced the face scanning technology firsthand, which measures pulse, blood pressure and heart rate variability. eChanneling's participation at the event reflects its commitment to advancing digital healthcare and improving access for Sri Lankans. Fitza is expanding its network with direct flights to Kuala Lumpur starting in April. The airline is offering an introductory return fare, including baggage allowances. This new route aims to boost trade and tourism between Sri Lanka and Malaysia.
Fitza is expanding its network with direct flights to Kuala Lumpur starting on the 4th of April 2025 with 4 weekly services. This move aims to meet the growing demand for affordable and reliable air travel. The airline is offering an introductory return fare of 65,300 Sri Lankan rupees, inclusive of 20 kilograms checked baggage and 7 kilograms hand luggage. Kuala Lumpur becomes the latest addition to Fitz Air's growing network, which includes destinations like Malé, Dubai, Dhaka and Chennai. The airline continues to focus on providing hassle-free and affordable travel options to its passengers. Fitz Air's new route is expected to foster greater trade and tourism between Sri Lanka and Malaysia. The airline remains committed to delivering reliable, on-time services while ensuring customer satisfaction.
Hutch has partnered with Sri Lankan Institute of Information Technology to empower undergraduates through its Future Connect program. Well, this collaboration aims to equip students with essential technological and professional skills for today's job market. The initiative focuses on key disciplines such as data analytics, IT networking, finance and HR, offering students valuable corporate exposure. Hutch General Manager Mangala Bandara emphasized the importance of aligning university education with industry demands to ensure long-term success. SLIS Professor Nimal Rajapaksha highlighted the significance of bridging academia and industry to prepare students for the workforce. Hutch continues to invest in education and skill development, furthering its commitment to building a skilled workforce for the country's economic growth. Time for a short commercial break. Global business updates coming right after this. Welcome back to the Nightly Business Report. Asian stocks rose today following optimism about China's economy as Beijing outlined target measures to boost spending. The Shanghai Shenzhen CSI 300 and Shanghai Composite indexes saw slight gains, while Hong Kong's Hang Seng index surged by 1%. Japan's Nikkei 225 index added 1.1% and the broader Topix index rose by 1.2%. Singapore's Straits Times index climbed 0.7%, supported by mixed export data, with non-oil exporters exceeding expectations. South Korea's Kospi gained 1.4% on bargain buying, particularly in major technological stocks. However, sentiment in South Korea remained cautious ahead of a key court ruling on President Yoon Suk-yeol's impeachment due this week. BMW said newly imposed trade tariffs could dent the carmaker's earnings by $1.09 billion this year, as escalating trade tensions between China, Europe and the United States take a mounting toll on global companies' finances.
BMW warned its earnings could take a more than $1 billion hit this year. The German carmaker blamed newly imposed tariffs. It comes as trade tensions escalate between China, Europe and the US. BMW forecast an earnings margin for its cars segment of 5 to 7% for the year. They factored in the impact of a full year of EU duties on its China-made electric vehicles. They also included US duties of 25% on steel and aluminum and on vehicle imports to the US from Mexico. Tariffs looming from the EU and the US would have a far greater impact on the carmaker. BMW is also the highest auto exporter by value from the US. It also exports over half its vehicles made in Germany outside the EU. Executives struck an optimistic tone on Friday, though. They said they don't expect the tariffs to remain in place for the whole year, but added if the situation changes, so does their outlook. Net profits slumped by more than a third last year to $8.3 billion, in line with market expectations. The auto giant blamed weak sales in China and Germany, as well as delivery hold-ups. Fourth quarter profit dropped 41%. That was also in line with BMW's warnings that higher fixed costs from unwinding inventory would hit its earnings in the last 3 months of 2024. BMW shares were slightly down after the update.
Taiwan's Foxconn, the world's largest contract electronics maker, said that the solid demand from its tech clients would drive strong revenue growth in their first quarter.
iPhone assembler Foxconn missed profit forecasts for the fourth quarter, but it's feeling upbeat about the future. The electronics maker said Friday solid demand from tech clients would drive strong revenue growth in the first quarter. The upbeat forecast contrasts with a cautious tone held by many other businesses worried about US President Donald Trump's trade policy. It also suggests booming demand for AI continues and will further drive hardware sales. Foxconn said AI servers would make up more than half of the company's total server revenue this year as it expands production for tech giant Nvidia. The firm added first quarter revenue from consumer electronics is likely to grow significantly. It also sees strong growth in sales from cloud and networking products. However, an escalating global trade war has complicated prospects for companies. Foxconn has a major manufacturing presence in China and Mexico. Both countries face higher tariffs under Trump's administration. Most of the iPhones Foxconn makes for Apple are put together in China. The company is also building a large manufacturing facility in Mexico to produce AI servers for Nvidia.
Well, that's all from us on the nightly business report for the day. We will see you again tomorrow with the latest updates in the business globe. Until then, I'm Vinod Vanasuriya. Thank you very much for watching. Have a good night.